The government's decision to allow FDI in multi-brand retail and other reforms have led to heightened political activity, with rallies taking place both in favour of and against the reform measures. Hello and welcome. You're with We Mean Business. I'm Shweta, Rajpal, Kohli. On the show today, we're discussing the politics of FDI and whether any party will be able to score brownie points over it. Let me introduce our guests on the show today. Shankar, independent economist and political strategist, joins us from Mumbai. Mr. Siddharth Nath Singh, spokesperson of the BJP, on a link from Delhi. Patrick Foulis, India business and finance editor of The Economist. Jesudasu Seelam, member of Parliament of the Rajya Sabha, Congress, with me here in the Delhi studio. V Prasad, chairman of Chime Consulting, will be joining us, and Kumar Rajagopalan, CEO of the Retailers Association of India, also joins us from Mumbai. Before we start that discussion, first a look at our top story of the day. Captains of industry today met with the finance minister to push forward the reform agenda and suggest ways of reviving India's growth momentum. Let's first listen in to what they had to say after that meeting.
Stressed a lot on the National Investment Board. We're delighted with the idea that there could be, at the end of the day, some element of single window clearance for big projects. What then happens is you get a project that is cleared at the outset. It's easier for the financing to come in. The problem today is not lack of finance. The problem is finance has got stuck in projects which are stuck. So banks are hesitating to go for the next project because they're worried that'll get stuck. If we can just unblock execution today, financing is not an issue. Bills themselves, as you know, the bills have already been tabled to make sure that the bills go through. So both the banking and insurance bill and pension bill, so all three bills needing to be passed in the December session.
The industry has been interacting with these committees already. So rather than repeat those things, what we suggested was that, let's see how we can take those forward. And the industry is actually behind those, and so industry will support the implementation of those reports.
So basically you're not in favor of the retrospective amendments, largely?
That industry has already said, and the government also has said, that they are going to relook at it.
My colleague Sapna Das now joins us for more on that. Sapna, a very critical meeting coming just days after we've seen important decisions being taken. What was discussed at that meeting, and can we expect the government to continue on its reform overdrive?
Well, clearly this was an interface waiting to happen. India Inc. or other select CEOs meeting up with the finance minister. Well, the meeting was more mutual in the sense that India Inc. came up with its own list of expectations. The finance minister gave them a very, very patient ear. Mainly on the agenda was, trying to keep the momentum up in the economy at the moment. Markets have recovered, the rupee has recovered, certain important reform-oriented decisions have been taken by the government, and some more are on the anvil. So that, in this context, the meeting has been held. Talking about specifics over here, starting off first on the taxation side, the Shum panel report has just come in on the final roadmap on GAR as well as on the retrospective amendments. India Inc. has really welcomed that. Though, of course, the finance minister has yet to put the report out on the website. He'll be doing that shortly. But more or less, industry is talking in one voice, and they have mentioned that they're happy that the government has actually heard them out. That's one. Second, of course, talking about the actual sectors like infrastructure financing, trying to get more debt from outside and trying to, kind of channelize that into the infra sector. There was talk about ECBs, how ECBs can be relaxed further, and how exporters can actually use ECBs to finance their short-term capital. A very, very interesting proposal that has been put up by FICCI over here. Talking on infra financing, well, everything under the sun had been discussed, including the power sector and the mining sector. India Inc. has gone ahead and welcomed the government's decision to bring in the National Investment Board. Hopefully, in the next cabinet meeting, that should get the government's nod. You have to wait and watch and see how that pans out. Third, the big indicator that has come out is that the finance minister has indicated that sometime in the winter session of the parliament, he should be able to get the pension, insurance and the banking bills out. So that's a big statement coming from him. Last but not the least, the big message also is that since it's a festive time, there is a need to push demand in certain sectors, especially the consumer durable sector, the auto sector and the likes. So here again, India Inc. did make a pitch for lower interest rates. The finance minister gave them a very patient ear. They're both on the same page on this, and the FM has indicated that yes, the government stance is reiterated in terms of the fact that interest rates should come down. Now, it's a different matter altogether what RBI will do on 30th October, probably even after that.
All right, looks like the reform process is here to stay. And another important development today is that the Deepak Parekh panel has submitted its report to the Prime Minister, coming up with some very, very critical suggestions. Let's also listen in to what Mr. Deepak Parekh had to say.
51 lakh crores is the amount of money to be spent on infrastructure. And I just wanted to say that in the 11th plan, which is just over in March 2012, the amount of money invested was 19.5 lakh crores. 19.5 lakh crores, and our target, our budget, our projection is we will go up to 51 lakh crores, which is $1 trillion. Two important points here. One is the amount of private sector spend. Private sector is expected to spend 47% out of this $1 trillion. In the 11th five-year plan, private sector spent 37%. So it is expected a larger role for private sector in putting up infrastructure projects.
Oinatam Ocha, who has been who's been tracking all those important developments, now joins us for more on that. Oinatam, a very critical report coming on part of the Deepak Parekh panel. Take us through some of the highlights and which are the recommendations that are likely to get accepted or at least taken forward.
Increasing the FDI cap in the telecom space from 74% to 100% is the key recommendation of the Deepak Parekh panel. The panel submitted its report to the Prime Minister today. Staying on with the telecom space, the panel has also recommended that the government should settle issues related to allocation, pricing and sharing of spectrum which have already been allocated. It also wants streamlining of policies as far as mergers and acquisitions in the telecom space is concerned. Another key issue flagged by the Deepak Parekh panel is regarding the manner in which the regulators are functioning at this point of time. They want the regulators to take more risk, to be more responsive to the sectoral needs. It in fact has recommended an overarching legislation to be introduced to make amends to the regulatory reforms.
All right, Oinatam, do stay with us because we've also got a very, very critical cabinet meeting that is expected tomorrow, a meeting that's expected to take up further reform measures. What's on the anvil?
The cabinet is expected to take up the proposal to increase foreign investment in the insurance space. The proposal is to hike the cap from the present level of 26% to 49%. But sources say that the cap of 26% FDI is likely to stay, and additional foreign investment to the country is expected to come in through FIIs as far as the overall 49% cap in the insurance space is concerned. So there will be 26% FDI and 23% FII. Now, why this is being done is because sources say that the BJP is understood to have informed the government that if the foreign investment is brought into the insurance space through a mix of FDI and FII, they might think of supporting the proposal when the bill comes to the parliament. But if the entire 49% FDI is done through only foreign direct investment, then clearly they are not ready to support the bill, which could be a difficult thing for the government. Back to you.
All right, the reform rush seems to be continuing. Many thanks, Oinatam, for joining us and sharing those details. Let me now move forward on the discussion of the day, the politics behind those reform measures. Let me start by asking Patrick Foulis about whether the politics is critical or not in driving forward India's reform agenda. Patrick, we've seen the government take a very strong position with regard to reforms. It is really in a position where it's saying take it or leave it. But given the fact that we've seen political pressure still continuing to build, how critical is that opposition to the reform process?
Well, I think foreign companies and outside investors are not naive. I think they understand that this is a very hot political potato in India and will not be at all surprised about the controversy, the debates, the protests that are taking place. However, I do think that will inform the broader context of retail businesses looking to invest in India. They will be worried about several things. One is if a state does support the policy, but there is eventually a change of government, for example, might there be a reversal of the policy. Second, they will be looking closely at the fact that only really a minority portion of India is likely to open up to foreign retailers fully. The 10 states, I think it is, that have supported the policy only really account for about a quarter or so of the country's population. And lastly, I think it is worth also bearing in mind just what's happening elsewhere in the world. Big retailers like Tesco, for example, have been having quite a rough time in other big emerging markets like China, and that may have tempered their enthusiasm for another big investment spree. So overall, my sense is that people will not be surprised by the politics, but that will all lead to a fairly slow and cautious approach to investment in India, with perhaps $1 or $2 billion a year in total coming from outside India into the retail sector.
All right, Patrick, I will talk to you in detail about the sentiment and how the reforms rush has actually helped change that. But before that, let me go across to Mr. Siddharth Nath Singh to try and understand the real politics that has been going on. Mr. Singh, we've seen many who have been very critical of the BJP when it comes to its stand on FDI and multi-brand retail, saying this was the same party that had included it in its manifesto. Why this U-turn now?
Shweta, let's understand that BJP did include many reforms in our manifesto, and FDI and multi-brand retail can be one of them. But all reforms were not executed or were being implemented by BJP. And this reform in multi-brand retail did come up through a joint secretary note, but it was shot down after a serious discussions within the cabinet committee. So let's not, say that every reform needs to be implemented. It needs to be debated on the merits, and the government of the day needs to take a call. Now, that's what we had taken. But let's also understand that BJP or the NDA regime was addressed or was being recognized globally that it is pro-reform, and we work towards it. Despite we rejecting FDI in multi-brand retail, and during our period, the FDIs, the FIIs, the fiscal prudence, consolidation, the interest rate, all these were being in checks and balances were there, and the government was performing with a leadership. Now, what we are seeing and what the noise we are hearing now, and on the FDI multi-brand retail, as if this is a big bang reform, and that is the only reform which the India needs, and the entire global investors and the domestic investors have been waiting, and they say now, well, India has achieved this, this is all what was needed by the government of India, and the reform is on, and the crisis, Indian crisis will be over. But certainly not. Let me put in a little different context, because I, apart from being in politics, I do have a consulting engineering business for last 20 years, and I work with the international consultants in a joint venture like Halcrows and WSPs and Atkins and everybody. So I do understand the other side, how the global investors come. When I look my own company and I have to do a business in India, there are 33 checks and balances which I need to, or authorities, government authorities, which I need to comply with. I'm no legal expert. One mistake, I had it. So that is a reform which an investor is looking. An investor, when comes to India, would be looking at a tax regime, clarity. Investor coming to India would be looking at fiscal consolidation.
Okay, sir, nobody is disputing the fact that India needs to become more investor-friendly, more business-friendly. But my pointed question to you here is on FDI and multi-brand retail and the kind of opposition that the BJP has tried to show in the last few days ever since the government introduced this measure. Again, coming back to the point of FDI and multi-brand retail, the fact that the BJP has almost threatened, saying that consequences may follow and they may reverse the policy. Is that responsible behavior on part of the principal opposition party, sir?
No, it is. Let's not bracket BJP as responsible or irresponsible. We are a responsible opposition party. We are here to rule India again. So we are very, very responsible, and we are careful what we make the statement. But let's not put the blame on the doorsteps of the BJP. The Prime Minister and the Congress party is unable to convince their own allies. First, let us see how they cross that bridge. Then let it come to the BJP what we are going to do when we are in the government. So let any reform cannot be without a consensus. The consensus doesn't exist within their own allies.
Okay, but the BJP continuing to oppose a critical reform measure like FDI and multi-brand retail, despite having talked about it in its own manifesto.
I'm sorry,
Let me ask Mr. Seelam,
Shweta, the word critical reform measure is wrong.
Okay, it may not be critical according to you, but does it really help in terms of overall sentiment? Mr. Siddharth Nath Singh, how do you explain the rupee appreciating as much as it has ever since the government ushered in these reforms? If these reforms were not critical, would we see the kind of reaction we've seen, for instance, in currency markets? Now, does that not explain that these are critical reform measures that are being awaited?
Shweta, please do appreciate there is a current account deficit which has come down not because the government has taken reforms. It is reflecting on the rupee side also, on the appreciation of the rupee, because there has been less imports, because of a recession in the country. There is a less capital goods imports which is happening. There is a drop in the petroleum prices. So these things are reflecting towards the government also on the current account deficit. So you're seeing those results. It is just not, yes, Sensex can go up on like a thermometer on certain sentiments, but it is not a reflection that things are happening or rupee appreciation is happening because of the government initiative by getting one big bang reform so critical for the nation.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.